The third key Fed entity is the Federal Open
Hello.
Market Committee, or FOMC.
Am I live now? I've been struggling with technical difficulties here, and all I want to do is watch an FOMC meeting.
The 12-member
Why?
FOMC establishes
Technology.
an appropriate position or
Why must
stance
you
on
hate me
monetary policy
like this?
to help move the economy towards
Please.
two essential mandates
Please tell me
set
I'm
by the
live.
Fed by Congress,
No.
promoting maximum employment
No,
and
why?
profitability. This occurs
Why?
mainly through the FOMC's influence on interest rates and credit
No.
conditions, which can significantly impact financial
How was the audio,
conditions,
by the way?
including economic productivity
Okay.
and even spending and
Well,
investment
this
decisions
is
by
supposed to be
households,
live,
communities,
but
and businesses.
it may end
Together,
up being
these
recorded.
three key Fed
This is
entities
my
and
third
unique
attempt
Federal Reserve
trying to
system
start a
structure
live
established
stream.
by Congress more than a
But
century ago.
oh, I'm hitting
Conditions
buttons.
resulting in
Oh,
a
what's
strong,
happening?
healthy, and sustainable
Oh God.
For more
Connect
information on how
streaming
the Fed
software to
functions,
go live.
visit
Okay, that's not a good sign.
federalreserve.gov and click
Pretty
on
sure
About
I'm-
the Fed.
Pretty sure I am live. Am I live? Is anyone here? Am I alone? Well, now if I am live, that'd be awkward. Now someone's just watching me struggle. Or maybe no one's here yet. In which case we're good. Yeah, I also don't know how to view chat. I've done this before, but it's been a few months. And I guess all of my abilities have vanished. Vanished entirely. It says it's been removed by the uploader, so I don't know. I don't know if I'm live or not. Well, I'll assume I'm not, but I'll talk as if I am. And I'm wearing a red shirt today. That can sometimes lead to problems because camera doesn't like me. I'm just going to act as if I'm live, even though I have no idea. And okay. Today, guys, we're going to be watching the FOMC meeting together. I typically do recorded videos rather than live streams, but I thought, hey, this could be fun. Why not? We can just watch it together and then, interpret it together. So that's pretty chill. What's up, guys? How are you doing today? I think I might be live, actually. Yeah, so we're going to watch this together. We're going to talk about what this means and what this means for crypto. And I thought this was like a pretty good way for us to interact. You can ask a question, and I could be like, yeah, either don't buy that coin or like, yeah, sure, buy that coin. Not financial advice, of course. So, if you're not sure what's happening today, or what this is, or what I'm talking about, today is the FOMC meeting. So basically, the Federal Reserve is going to announce today whether they're cutting rates or whether they're delaying rate cuts. Now, for us, us master crypto traders, us master stock traders, what we want is we want rate cuts. And the reason we want rate cuts, okay, I'm pretty sure I am live, but I might be talking to myself. I don't know. You'll let me know. The reason we want rate cuts is because when we get rate cuts, they have already announced. Oh, okay, I must be live if someone's chatting. Have they announced? They haven't even gone live yet. It's not live. I can check Twitter though. But do you have a link? I'm on the official Federal Reserve YouTube channel. So I am not yet seeing an. Oh yeah, you're right. Just a few seconds ago, huh? They just announced a 25 basis point rate cut, which is great. Yeah, this is exactly what we were hoping for. I'm kind of surprised that they're not saying anything on their official YouTube channel. They're live. Maybe this isn't working. Is this working? The Federal Reserve. Yeah. No. What? Why? Why have you done this to me? Okay. Well, we'll see. We'll see them go live and see what they have to say. But yeah, it seems that they already have cut rates by 25 basis points, which is 0.25% to the federal funding rate. And this is what we expected. Yeah, there was like a 98% chance right before this on Polymarket. The CME FedWatch tool had a 98.6% chance. So this is exactly what we expected. Yeah. I'm kind of surprised they're not showing it. Or what's happening here. Maybe I'm not the only one with technical difficulties. That would be great. Yeah, but nice. Yeah, this is kind of scary, by the way. They're cutting rates into rising inflation. Not so good. That usually means that we're going to have pretty bad economic crash after this bull market. Yeah, not so good. Can you let me know, by the way, how the audio is? Is the desktop audio too loud? Is the microphone audio too loud? And even if, I don't know, if they never like go live to announce it via, I don't know, public routes, then I mean we can of course still always talk about how this is going to affect the markets and whatnot. And this is kind of interesting. We've had a sharp drop after announcing the 25 basis point rate cut, which is a little spooky, and apparently stock market also. Yeah, S&P also fell quite hard. So yeah, this is not good. We're kind of hoping for a stronger bounce here. I can full screen this for you guys. Yeah, we kind of needed a stronger bounce here. I don't know why it fell. Just a normal reaction. Maybe. I feel like if it were positive news, it would bounce rather than drop. Sell the news. Maybe. I would imagine they would sell the news after it bounced first. But yeah, I mean you're absolutely right. This is totally possible. But yeah, we definitely need a close. We can turn on some stuff here. Well, we definitely need a close over 103.5. If we have a close under 103.5, then I'm starting to feel a little bit scared, and I'm probably going to scale out a little bit of altcoins and Bitcoin and probably the market entirely, and expect a bunch of sideways chop. That is what I would do there. Man, I kind of want to hear him talk, not gonna lie. The whole point of the watch party was to like get the news and hear it together. But if they're not even live yet, I'm a little disappointed. I must say. But yeah, hopefully you're right. This is just like a mini sell the news event. Maybe we wick under 103.5 and we bounce up and continue grinding up, and then that would make, this would count as higher lows for Solana and Ethereum and altcoins. That would be ideal. That would be like my favorite response to this. If, however, we sell the news event, we bounce a little bit, and then we kind of grind down and close under 103.5, well, then I'm a little bit scared, and I will be scaling out a little bit, and I expect this longer correction. We can go into specific numbers if you guys want. I got some new fancy stuff set up just to give you better numbers. I don't know if that's what you want. We can take a look at total TVL. Yeah, even total TVL is dropping a little bit, so that's kind of scaring me as well. So I need a bounce here. Otherwise, I'm a little bit worried. If you guys have any specific coins or, anything you want to look at, drop that in the chat, and we can totally look at that. Total market cap. Yeah, this is starting to fall a little bit. Everything is starting to fall a little bit, and it doesn't mean anything yet, right? I mean, this is still a higher low, higher high, higher low, lower high, but this right now is in higher low territory. Arweave, yeah, we can take a look at Arweave. Arweave is the ICP similar, right? I don't know if I have that here already. I might have to search that one. I've got ICP. Yeah, I don't have Arweave, so let's look at that. I haven't looked at it in a while. Yeah, I mean, Arweave is just like right off the bat not looking good. Arweave is, if we just zoom in on its actual chart, it's the EMAs are starting to cross over. It had a death cross actually yeah, it painted a death cross over here. Where did it? Actually, mid-August, it painted a death cross. And okay, maybe it's doing a little bit better. Its price action's like a tiny bit better. It just at a higher high, and right now it is in higher low territory. So it's showing weakness compared to other coins. So I don't know if it'll outperform other coins, but it looks like right now it is trying to grind up a little bit. I don't know if I know they have their new like AO, on stack computer coming out, so they can do full computation on chain. But I remember looking at this a while ago, and it was more expensive than ICP, which, by the way, I consider a better version of Arweave, except Arweave is more expensive, and ICP itself also isn't looking that great. I don't know. This roundup was okay. But yeah, Arweave is the way you'd want to play Arweave, in my opinion. I've got a tiny bit of this. Is what I would do is, as soon as they announce like the launch of their AO computer, then I would probably sell the news on that. It's my guess what everyone's waiting for. So I would wait for, hopefully they drop, okay, we've launched our new massive upgrade, then it pushes up like crazy, and then I think everyone will sell and scale into ICP or other stronger altcoins. Yeah, MACD, not looking good. It's got a lot, like, very strong downward momentum right now. Not looking good. Yeah, we had this cross up here. Yeah. So, do you know when that is? I have no idea when they're launching it. I thought it was pretty soon. I remember them talking about it like a few months ago, and they were like pretty soon, and they're still saying it's pretty soon. I don't know if we have an official date yet. Hopefully soon. I want to. I've got only a little bit, but I want to sell it already. So yeah, I guess like I could stalk their Twitter, but I don't want to do that right now and just try to like find it. But if you join the Discord in the description, which you should. I can post on there. Is there still there's still nothing. Man, what's going on? There's no comments. There's 8,000 people waiting to watch. I wanna watch, man. I don't want to just know the rate cuts. I want to watch. I want to see the Q&A too. 2:30? Oh, am I early? Man, what is going on? Can we look at cake? Yeah, we look at pancake. I think it's pancake swap, right? Yeah. Okay, this is looking really, really good. This was March. This is one of those Dino coins. This is one of the Cardano XRP types. I don't have any of this coin personally, and I also don't know much about it. I only know it's like a DEX on Binance, which I don't know or Binance chain. I don't even know if anyone uses that anymore. I mean, this run was crazy. It did quite good. It ran pretty hard. Let's see. It ran hard. It did like almost 400% from its bottom to after the ETFs were announced. It ran really hard, but then it crashed really hard. So, I mean, it literally lost everything. It literally lost all of the progress it made. Let me full screen this. So, that's a little scary. That tells me that there's probably a lot of bag holders from back here. My guess is there's a lot of people that are holding from over here back in 2021 that lost a lot of money and haven't sold. And now any little price movement, they're just immediately trying to get out. So while this price action looks pretty good, I must say, I'm kind of worried that all these dinos back here, they will constantly be dumping on you anytime the price moves up, which is kind of alarming. Because yeah, it's kind of rare. I don't know many altcoins, if any, that literally lost 100% of their gains from the start of 2024. Then it dropped It literally dropped like almost 80%. That's pretty ugly. So, yeah, it looks like it's got upward strength, but also has downward strength. Like, the good thing is it pumps really hard. You can see, like, MACD, it always pumps really, really hard, but then it crashes really, really hard. And now it's pumping really, really hard. Now it's crashing really, really hard again. So, yeah, a lot of buying and selling pressure. This might be a good coin to, like, maybe, like, really short-term swing trade. So you're not going to hold it long-term or anything. Kind of like, yeah. I wouldn't hold it like long-term probably for this whole cycle. Probably too much selling pressure. But after these long crashes, or after these deep crashes, like back here, here, and here, yeah, this totally may be maybe a coin to to short-term trade, because maybe you can catch one of these crazy upward moves. It pumps really, really hard and you just sell right away. Those are my my 2-second thoughts on cake. Yeah. Let's see. This still isn't starting. So was it pushed back to 2:30, or rather 1:30 because I'm central? So maybe it starts in another 9 minutes. Although I don't know what's going on with the fact that people seemingly know that there's already rate cuts. So I don't know what's going on with that, but hopefully we get something. I would really like Q&A. I want to know what he has to say, what his thoughts are about the future, because if he's like worried about this rising inflation, then maybe we won't get a rate cut. Maybe we'll get a delay next or something. So I want to know. I guess we'll stall for another 8 minutes, and then we'll take a look. Why don't we take a look at just like the totals for now, and see what's gonna happen in the short term, and if there's anyone else listening, or if YouTube home you have got another coin, you can totally drop that. We'll take a look. Yeah, because we looked at this just a few days ago. Not much has changed. What's scary is that we have kind of like failed to really close above this 3.67 range, which is not good. Which is showing like we got a lot of resistance up here. So again, all of these things are saying that we're like way overbought and we're due for quite a strong correction. We can actually, why don't we quickly take a look? Yeah, let me jump to your coin in just a sec. Let's just take a look at the total market caps. Oh, I thought I was starting. I got excited. There was like this new music. I got hyped up for a second. All right. Yeah, we can maybe bounce off the 20-day EMA. That would be ideal. However, if we turn on our fibs, well, why don't we just turn a lot of this on? Get an idea. Let me block this RSI so I can see this fib. All right, this is my new fancy stuff, guys. By the way, guys, if you're stopping by, if you're here, make sure to subscribe. You guys gotta subscribe. We're hanging out live. So we've got a resistance here at 3.46 roughly total global market cap. We have the next resistance would be at 3.3, and the next would be at 3.22. The next after that would be at 3.14 trillion. So we do have quite a lot of resistances. I must say, we have quite a lot of, or rather, I mean, support, because we're going down. We have quite a lot of support zones, which is really good. So even if we do have some correction, it looks like we may not be there for too long. We may bounce pretty strongly, and it may not be that deep even, which is really good. If we take a look at total too, this is looking a little bit weaker. So yeah, Bitcoin is definitely outperforming right now. Ethereum and altcoins. Yeah, I think for total too, again, if you're not sure what this is every single cryptocurrency except for Bitcoin. This is not looking as good. we're like roughly at a resistance, but we may lose it. We may drop to 1.42 trillion, and the next after that would be like 1.4 trillion. So again, we got a couple resistances here. We're a little bit lower at or again, I keep saying resistance, and I mean support. Yeah, this is looking a little bit weaker, but we may be at some good zones. Let me close out of this. And I'll give my general thesis for what I think about all this in just a second. I think, okay, for total 3, so this is all altcoins. Why don't we just look at others, because this is going to be... This is everything except the top 10 altcoins. So if we take a look at this, we can see that, yeah, we're overbought. We're coming down a little bit, just like the others. We're actually at, like, we're at a support. Again, I almost said it. We're at a support level here. I can full screen this. You know, there's just so many mixed signals here. There's just so many mixed signals. We are making, and again, we had a lower high. And a lot of indicators here are showing bearish. And we do have a couple close supports that we could come down and touch. But what makes this so difficult, and again, I said this in previous videos. Sorry, this is a bit like more disorganized because it's live. Bitcoin is just continuing to grind up despite these bearish signals. It even flipped, I mean, it even flipped bullish on MACD, although it's looking like it's going to flip bearish again. And if it does, then that's time to scale out of the market and wait for some of these support zones to start scaling back in. So just to summarize everything I just looked at, the entire market is looking overbought, overvalued. It needs a correction. Total TVL is coming down. These total market caps are coming down. MACD is flipping bearish everywhere. The only reason that this might trend upward is because Bitcoin's continuing to put in higher highs, higher lows. BlackRock's still buying. MicroStrategy is still buying. Yeah, so it's just continuing to go. But if we see a close under 103.5, and I was saying this in the beginning of the stream, that is a sign that yes, or if we see this flip bearish, that is a sign that, okay, this momentum is really slowing down. We're going to have a global market-wide crypto correction, and that's a sign to start scaling out. And you can tell already from what we looked at that altcoins have already begun this a little bit, and they've already dropped. Some of them are at decent zones, and Bitcoin, assuming it drops under 103.5, then that's going to kind of start the entire market-wide correction, including Bitcoin. Okay, let's take a look at your coin. Engine coin, what is it? Engine coin. Also, is this also on BNB? I don't know what chain this is on. I've never heard of this coin. Let's see, is this a Dino coin too? Let's take a look. Let's just take a look at this chart. How old is this? Let me see. Yeah, it's one of these Dino coins. Yeah, so I would be honestly, if you're still here, YouTube home, I would be a little bit scared of this coin. I think for the same reason that I'm a little bit hesitant on Pancake Swap. Let's see. This is down from its all-time high. It's down. Okay, wait, that's sorry. 97%. 97%. That's a bit much. The problem with these kind of Dino coins, these coins that have been around since last cycle, since 2021, is that there's lots of people who have lost a ton of money here in this huge crash. A lot of people lost a lot of money, and they don't want to sell at a loss. So they're just holding onto the coin. And so it's sitting in all these wallets and all these accounts, and during this whole time, they're waiting for good times to sell. Because, like, if it jumps up a little bit, like, oh, maybe I can, sell it for a little bit higher. So same as the last coin, same as Pancake Swap, people don't, this isn't the shiny new thing anymore. This is not gonna, this is just gonna have too much selling pressure, I think. It's gonna struggle to get up, just like Pancake Swap. I think we can see the exact same problem. Yeah, look at this. Look at this. This sucks. This made a higher high finally coming out of the bear market. And this has been making since then. It made a lower low, actually. Or sorry, lower high. So this is still trending down. So this is a coin that I would just avoid. I wouldn't even try to play it like Pancake Swap, where maybe you can get in on these giant pushes upward. So, just not looking good. Okay, are we? Oh, okay, there we go. Here we go. Finally. Where's the guy? Come on. He's kept us waiting long enough. I've stalled long enough. Let me at him. Oh, here we go. Guys, I can't hear like you can, so let me know how to adjust the volume. Okay, I'll shut up now.
Good afternoon. My colleagues and I remain focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made significant progress toward our goals over the past 2 years. The labor market has cooled from its formerly overheated state and remains solid. Inflation has moved much closer to our 2% longer run goal.
Closer.
We're committed to maintaining our economy's strength by supporting maximum employment and returning inflation to our 2% goal. To that end, today, the Federal Open Market Committee decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in September. Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.25% to 4.5%. We've been moving policy toward a more neutral setting in order to maintain the strength of the economy and the labor market, while enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. In our summary of economic projections, FOMC
Yikes.
participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. On a technical note, we lowered the offering rate on our overnight reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh, man. He is opening the door for delaying rates. That's what this
Smiley
was.
with the New York Times. Thank you for taking our
Future
questions.
FOMC meetings.
I wonder if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer call, but we decided it was the right call because we thought it was the best decision to foster achievement of both of our goals: maximum employment and price stability. We see the risks as two-sided: moving too slowly and needlessly undermine economic activity in the labor market, or move too quickly and needlessly undermine our progress on inflation. So we're trying to steer between those two risks. And on balance, we decided to go ahead with a further cut, and I'll give you some details on why. Downside risks to the labor market do appear to have diminished, but the labor market is now looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level, that would hold unemployment constant. The job finding rate is low and declining, and other measures such as surveys of workers and businesses, quits, things like that, broadly show a much cooler labor market than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. But 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is making progress slower than hoped. And we've had recent high readings from non-market services and some bumpiness for goods. So I'll just say, so remember that we coupled this decision today with the extent and timing language in the post-meeting statement that signals that we are at or near a point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025.
Uh-oh.
I think that
Market's not gonna like this.
The slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher. You saw in the SEP that risks and uncertainty around inflation we see as higher. Nonetheless, we see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Sorry, just one quick follow-up. Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point. I would say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral.
So people can buy houses.
At 4.3% and change, we believe
cars,
policy is still meaningfully restrictive.
Jobs,
As for
get
additional
jobs.
cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be cautious about as we consider further cuts. And all of that is reflected, to your question, in the December SEP, which shows a median forecast of now 2 cuts next year compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question. So this does seem similar to the dynamic in 2016 during the last transition to a Trump administration, where the committee saw slightly tighter policy, in part in expected anticipation of the fiscal policy stance that was seen evolving over the year. Some of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy next year?
I'd say I'd point to 5 or 6 things, and let me start by saying that we think the economy is in a really good place, and we think policy is in a really good place. Let's remember that the economy is growing 2.5% this year, that inflation has come down by 50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected, and is expected to be above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be cautious about further moves. But then getting to your point, there's also there's uncertainty. Uncertainty around inflation, I pointed out, is actually higher. It's also in the case of some people, the way I would say it is this: some people did take a very preliminary step and start to incorporate highly conditional estimates of economic effects of policies into their forecasts at this meeting, and said so in the meeting. Some people said they didn't do so, and some people didn't say whether they did or not. So we have people making a bunch of different approaches to that. But some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation. The point about uncertainty is it's kind of common sense thinking that when the path is uncertain, you go a little bit slower. It's not unlike driving on a foggy night or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation in September and October. As I mentioned, November is back on track, but once again, we've had a year-end projection for inflation, and it's kind of fallen apart as we've approached the end of the year. So that is certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation. As I mentioned, as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month inflation as the 12-month window moves. That's in part because inflation was very, very low measured in the fourth quarter of 2023. Nonetheless, as we go forward, we're going to want to be seeing further progress on bringing inflation down and keeping a solid labor market.
Chris.
Thank you, Chris Rugaber at Associated Press. Thanks for taking the question. In September 2018, the Fed staff in the Teal Book discussed a policy of looking through any new tariffs as long as there were one-time increases and inflation expectations remained anchored. Could you comment on if that analysis remains effective and any other thinking on tariffs generally that you can share?
So I do think that the September 2018 Teal Book alternative simulations are a good place to start. I happen to have brought them here with me today. I'm sure you have them too. They're a good starting point, and I would just say, it's 6 years old analysis, but nonetheless, this is still, I think, the right questions to ask. And there were 2 simulations. One was seeing through, one was not. And I'd point you. There's some language in the see-through paragraph that says, that considers situations in which it might be appropriate to see through inflation, and then names some conditions that in which it might not be. In any case, this is not a question that's in front of us right now. We won't face that question. We don't know when we'll face that question. What the committee's doing now is discussing pathways and understanding, again, the ways in which tariff-driven inflation can affect, tariffs can affect inflation in the economy, and how to think about that. So we've done a good bit of work, all of us have, each of us has, and it puts us in position when we finally do see what the actual policies are to make a more careful, thoughtful assessment of what might be the appropriate policy response.
Great. And just a quick follow-up. Given the recent bout of inflation that we've been through, with consumers seeing how prices can rise and businesses seeing that they can raise prices at least for some time, does that make it a little bit riskier to look through tariffs? I mean, do you feel you have to respond more quickly to inflation threats, given what we've seen in the past few years?
So the main thing is, and this is also a point in these alternative simulations, is there are just many factors that go into how much tariffs will even go into consumer inflation. How persistent will that be? And so we just don't know really very much at all about the actual policies. So it's very premature to try to make any kind of conclusion. We don't know what will be tariffed from what countries, for how long, in what size. We don't know whether there'll be retaliatory tariffs. We don't know what the transmission of any of that will be into consumer prices. To your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take on board that we want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9. That would be meaningful. We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling, so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken to infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So the sense of that wording is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Yeah. Clearly, that distance has shrunk by 100 basis points. Dropping. So it's significantly smaller. So that's the extent question. And we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests, again, that we're at a place where we assuming the economy develops as expected, we're at or near a level that will make it appropriate to slow the pace of adjustment. So that's what we mean by that. We're not trying to make decisions about the longer run. We're trying to make sensible policy as we go. And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects they will have. We'll have a much clearer picture, I think, when that happens.
Mike.
Michael McKee from Bloomberg Radio and Television. Even though you've cut rates by 100 basis points this year, we haven't seen much change in mortgages, auto loan rates, or credit card rates. You say you're significantly restrictive. Are you running a risk that the markets are fighting against you and the economy could be more at risk of a slowdown than you anticipate?
So,
great question.
The rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policy so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts included the phrase, we need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates. And, we made, look at the broader sweep. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that we have been for headline inflation. So I would say I'm confident that inflation has come down a great deal, and I'm confident in the story about why it's come down and why that portends well. And I'll tell you why. Again, you do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought 2 years ago, but it's nonetheless steadily coming down as market rents start to equilibrate better with new leases that turn over, not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing pretty much as we expect. Goods inflation, which is another big piece of it, has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services, and market-based non-housing services are in good shape. It's non-market services, and those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down, is still intact. In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source of inflationary pressures. Not to say there aren't regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later in housing insurance. It's real inflation, but it doesn't portend persistently high inflation. So we and most other forecasters still feel that we're on track to get down to 2%. It might take another year or two from here, but I'm confident that that's the path we're on, and our policy will do everything it can to assure that that is the case.
We're going to talk about this after this.
Thank you. Colby Smith with the Financial Times. So the unemployment rate as of November, while still very low, is within spitting distance of the level that generated a lot of concern about the labor market over the summer in the lead up to the 50 basis point cut in September. Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of the risks confronting the labor market? Is there just less concern now on that front, or is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and down, but it's now the same as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's steady at a level which as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might, if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So but you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think, you pointed out, participants in the FOMC really thought that the risks and uncertainty had improved relative to the labor market. And it's because things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening in the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further softening to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it, we don't think. If you had a situation where inflation's moving around by a tenth every few months, that's, we'd have to weigh that against the fact that inflation has, in recent months, been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused, mainly focused on inflation. We've now gotten to a place where the risks of the two are, we think, are broadly, roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points, and that's a good thing. I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look, those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated by many to be in the mid-teens for core PCE. So that could be idiosyncratically low. We try to look at not just a couple or 3 months. We shouldn't have, our position shouldn't change based on 2 or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think, 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair. Thank you, Chair Powell. Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course. That's part of what we do. But, we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, We've seen inflation, well, over the last couple of years, come down a lot. We've seen the labor market cool off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the economy that are affected by that are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. You know, a lot of things move financial conditions around, as you know, and we don't really control those. But I'd say we see the effects we're hoping to see on the goal variables and the places where we'd expect to see it.
So if I may, speaking of assets that have been buoyant, do you see any value or benefit in the U.S. government building a reserve of Bitcoin?
So, you know, we're not allowed to own Bitcoin. The Federal Reserve Act says what we can own, and we're not looking for a law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
That's it?
Hey, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we've avoided the recession that forecasters were predicting as inevitable a couple years ago.
I think it's pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come in around 3% this year. This is a really good number. Again, the U.S. economy has just been remarkable, and it's when in these international meetings that I attend, this has been the story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation. I feel very good about where the economy is and the performance of the economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people are not losing their jobs in large numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening, further softening. I didn't mention it earlier, but I think you can see an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and you know, that's part of the reason that explains why we moved ahead today with the action, with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level, wage growth. And so the labor market, this is a good labor market, and, you know, we want to keep it that way.
Thanks.
Amira.
Let's do one more question.
Thank you, Amara.
And then I want to talk about
News. I just want to put a finer point on the
this.
labor market. Can you keep the labor market this way, in the strong position that you have described, without further cuts? In other words, do you still view the labor market as needing support to protect against a further cooling?
You know, we can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. You know, job creations are meaningfully positive. Wages are, you know, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that
okay. This is just the same question over and over again, guys. I want to talk about quickly how the market is going to react to this, and I'm sure that it's reacting to it already, and it is. Yeah, so stick around, guys. Even if you don't know anything about charting, don't worry. I'm going to break this down for you and make it really easy, as I always do. And say hi to YouTube. This is going to be going on YouTube. This is not good news we got today. So we got that, yes, we got our 25 basis point rate cut, which is good news. And then we had this rhetoric that sounded like, okay, we need to slow this down. We've been cutting rates a lot and markets are going crazy, and now we have to start some delays, which was quite scary rhetoric. And yeah, Bitcoin is already, I'm hesitant to use the word crashing, but it is dropping quickly from it was yesterday, it was at 108, now it's at 101. So in just a single day, it's dropped, let's see, about 6%. And is this the end? Are we going to bounce soon? And after hearing this, I'm quite confident that no, we are not going to bounce very quickly from this. And of course, I can be wrong, but I think at this point we're very, very likely to have a bit of a cool off period. I can absolutely see Bitcoin. We can even turn on our fibs. Yeah, this is looking. I'm gonna block this RSI for just 1 second and let this fib load in. And don't worry, I know this looks crazy. And we're going to look at Bitcoin. We can look at a few other coins, and then we can talk. So we have this pretty big candle to the downside, and we are coming to retest this 100K level at EMA 20 days. And are we going to stop there? My guess is no. My guess is that we're going to have a little bit of a cool-off period. As you can see, the MACD has just flipped bearish, actually, once again, with strong momentum, which is not a good sign. This is a bearish sign. We are over the 20-day EMA, which is, again, a bearish sign. Let me see. Yeah, so we're going to probably touch this stop loss at 100K, bounce a little bit, similar to what we're kind of doing now, and then we are going to continue going down. So I am getting scared, and after this video, I'm going to go take some more profit, definitely off of Bitcoin, and if altcoins haven't dropped too quickly, then I would like to shave some off of those. Let's take a look at Ethereum. Actually, really quickly, my guess is that we will lose 100K. My guess is that we are going to chop a little bit like this, kind of, for a little bit. My guess is we are going to lose 100K. Let me just see. There's eight of you watching right now. Let's go, guys. Give me a subscribe. We are going to lose 100K. I think it's very realistic. I think 93K is also very realistic. I can absolutely see us touching that. We have, which is our next fib resistance. We have a resistance at 91 or roughly 92, which I can absolutely see us touching as well. And I would not even be surprised if we come down to touch 86 or 82. I think that's very realistic. Unfortunately, as you can see, this MACD is still way overextended. Yeah, signal line is once again crossed over MACD line. Yeah, we're dropping below the zero line here. Not looking good. We are way over the EMAs. Not looking good. And we're probably going to drop between this range too. My guess, my honest guess, I can totally see 86K. I can see that. What do you think about Link? Yeah. Are we going to top 10? Let me look at that in just a second. Let's hit Ethereum and let's hit Solana really quick, and then we'll hit Link. Ethereum is looking, I would say, a little bit scarier. The first thing I notice immediately is this double top pattern, which is a bearish sign. If we take a look at the MACD, again, we see this. Oh, I'm still on my paintbrush. We can see, and yeah, market is dropping right now. Wow. We can see that we are way overextended. Signal line's over MACD line, bad sign. We're way over this baseline. Again, bad sign. Not good. We've just lost the 20-day EMA, and we are heading towards this 56 first fib level. So, are we going to bounce off? Are we going to bounce off 3,600? It's possible. Most likely, we've got this stronger resistance here at 3,400. I think that's probably more realistic. I think we absolutely can hit 3,600. And if we lose that, I really don't expect to get under 3,100 or 3,000 for Ethereum. But yes, we do have some downside, it looks like, coming for Ethereum. Let's take a look at Solana. So Solana is looking different than the other two. Same with, I made a couple of videos on this. This is looking a little bit different than the other two because it looks like it's been correcting for a little bit of a while now. And I think it probably has a little bit less to lose. So I think this one probably won't get hit as hard, actually. This is looking like, yeah, we're probably going to drop under this baseline level like the signal line already did. And I expect a pretty strong run for Solana after signal line crosses, or rather, MACD line crosses over signal line under this 0 level. I think Solana can actually run pretty hard. It probably needs a little bit more chop. I can even see it hitting, it's at 210 right now. Yeah, I think anywhere around 190, I can see that being a realistic possibility. I think if you can buy between 180 to 190, that's an insane deal that you got. If you can buy under 200, that's an insane deal. And if you can buy low 200s, I think that's also a good Solana price. I think even right now it's decent. I really do. I think if you buy now, this is a decent price. But I will personally be trying to do a little bit better. Okay. Georgie, let's hit Link for you. Okay, Link has, it took a while, okay? It took a while for its move, but it finally is doing a little bit better. Now, Georgie, I got some bad news for you. I'm sorry, bud. But the first thing that I'm immediately seeing, and why don't I turn these off for 1 second, is just looking at this chart and just looking at these momentum indicators. Let's just keep it simple. This purple line, when price is over this purple line, that is like a sell signal. And when you're way over it like this, that is a strong sell signal. So it looks like to me that we are way over it, and we're now finally just now coming down to touch it. And I definitely can see this heading quite a bit lower. I also want to quickly look at this MACD. Look at how overextended this is. This is super, this is way above the histogram. These bars down here, when it gets way over that, that's a sign that it's way overextended. This is the 0 line down here, and Link is way over this. So it's not even really begun correcting yet. This has a lot more to go on the MACD until it's considered at this more fair value price. So yes, this is TradingView. I'm a little bit scared about Link. What is this at right now? $25. I would definitely be looking to take a little bit of profit here. Yeah, I don't have a lot of Chainlink. I've got very little of it. So, I mean, I'm just going to leave it. I have like very little. But if you have like a real amount, then I would be taking profit. Of course, nothing I say is financial advice. I have to say that I said it earlier, but that's not going to make it into the video. By the way, if you've made it this far, make sure to subscribe. Make sure to like the video. Guys, we're going to keep looking at more coins, but I just got to say this for the YouTube guys. And make sure to join the Discord link in the description. We have this awesome AI trading assistant with massive upgrades coming to it that you don't want to miss. It will help you immensely. So make sure to join the Discord link in the description. Now, if anyone else has any other coins, we can quickly take a look at those. And then I got to go sell some crypto. We can also take a look at these total market caps to get an idea of how overbought are we, how long or how brutal is this cool off period going to be. And let's start by looking at the global market cap. And this global market cap is every single cryptocurrency combined. And yeah, we have just set, funny enough, we are actually, because of Bitcoin, still setting higher lows, higher highs. But based on the action that we are seeing, it looks like this will not continue. And another reason I say that is not only are we over the 20-day EMA, this MACD is way overextended and momentum is increasing. I wish there was a way we could just zoom in on the histogram here. But it looks like we definitely have more coming down to do. And before, I was a little bit unsure whether we're going to get chop and wait for these momentum indicators to catch up rather than us go meet them, or if we were going to dip into them and then quickly kind of stabilize there. But after today, I'm growing increasingly concerned that no, we are not just going to chop sideways in this like boring range. Nothing happens for a month or two. I'm starting to worry a little bit that we are going to get some downward momentum. So where can this go? I think it's probably less useful to look at like global market caps to see what kind of support or resistance levels are there. It's probably makes more sense to look at specific coins. So this can definitely drop, but I'll keep you guys updated, but I don't want to look specifically at what levels for the total market cap. Let's just look at the market cap of Total 2, and this is every single cryptocurrency except Bitcoin. So this is Bitcoin, Ethereum, Solana, and a bunch of other stuff. Guys, if you're just tuning in now, thanks for being here. Make sure to subscribe, and if you have a coin you want us to look at, drop that in the comments. This has just set a clear lower high. And this is scaring me a little bit. Yeah, we'll take a look at Lido. Yeah, this is not good. And it looks like we are now going to be setting a lower low soon, but maybe not. And I have to be honest that this looks, while this is overbought, this looks better to me than the total market cap. And that's because not only are we breaking under this 20-day EMA, it looks like we've already had a little bit of correcting on the MACD near Jupiter. Yep, we can take a look at all of those. I can tell you right now that I think Jupiter, I don't like Jupiter. I can just tell you that right now, but we'll take a look at it. Yeah, so this is just like a problem, and momentum is increasing on the histogram. Again, not good sign. And also, on some of these prior coins, we were way overextended. Like for example, we're up here, and at least this has come down a little bit. So, okay, so yeah, this still has more to come down, but maybe less pain compared to total market cap like Bitcoin. Maybe a little less, maybe not. But from what I'm looking at, let me get rid of this little white dot. This is probably a little bit more fairly valued. Let's take a look at Total 3. Let's skip Total 3 and go straight to others, because others excludes everything, including don't be scared, a buying opportunity is coming. Oh yeah, absolutely. You're totally right. Let me clarify this. On the longer term time frames, everything is looking amazing. Crypto is looking totally amazing. I'm just specifically talking about like the next few weeks, maybe next month. So if you're in here for the long run, this is looking like an amazingly strong market. We have way higher to go. But in the immediate short term, if you're trying to swing trade this and try to, compound your earnings a little bit, which is, I think this is what, most people should be striving for if you're in the market. And of course, that's not financial advice. That's just a personal opinion. So if that's what you're trying to do, I'm just trying to make you aware of current market conditions. But yeah, just the short term. This also is looking a little bit better than actually the previous two. So it looks like altcoins have been hit pretty hard a little bit. They started correcting a while ago already. So Bitcoin and maybe Ethereum and some of these other top coins still have some more correcting to do in relation to smaller altcoins, because altcoins have already started correcting. I can also take a look at more of these charts to see. We'll look at these more specific indicators when we get to specific coins, actually. This I can see going a little bit deeper. I think it definitely has a little bit deeper to go, and I think we will get an amazing buying opportunity. However, and same with MACD, momentum's increasing, but so we still have a little bit more correcting to do, but not a ton more correcting to do, and we may actually get some pretty good deals on these altcoins quite soon. Also, altcoins tend to correct faster. They bleed harder than Bitcoin does. So we may get into these like fair value territories quite quickly. It's totally possible. So there's that, which is great. Now let's take a look at some of your guys' specific coins. And by the way, if you are not watching this live, if you're watching this on YouTube after the fact, make sure to subscribe and turn notifications on so that you can join us for the next live, and suggest your coins. Also, make sure to join our Discord, because then you can just suggest your coins there, and then we can talk more specifically about your coins. So first we have to take a look at Lido. I don't think I have it here right off the bat. Okay. This is looking, okay, let's take a look. So this definitely has a little bit of correcting to do. I'm going to zoom out on this a little bit to get a clearer picture of what I'm looking at and how old this coin is. So this is one of those, I don't want to call it a dino coin if it launched in the bear market. So, okay. This is the liquid staking token, if I remember correctly. I wish I could turn RSI on. Will this work with me? Yes, it will work with me. Great. This is showing some choppy action. A lot of up and down, making it kind of unclear. But let's take a look. Let's zoom in a little bit, and let's get a clear picture of what's happening. So, okay, so we are over this 20-day EMA, but what's scaring me is that this 200-day EMA is kind of, it's crossed above the 100-day, and it's looking like it wants to cross over the 50-day, which is generally a bad sign. It's something that you don't want to see. And what's interesting is that this has also painted a higher high, and this was a lower low. This is an ugly lower low. This makes me think that there's a lot of sell pressure, which scares me. And this is a higher low. So this is looking unclear. It's got some strong tendencies, some weak tendencies. I'm kind of concerned about selling pressure. I think maybe this might do well in the short term right now. Like I could totally see this actually maybe doing a little bit better like this, if that happens. But I think long term that other coins are going to outperform this. Another thing that I noticed that I want to mention is that this last run up was way, way too strong. So we definitely have a lot of correcting to do. So I could see this, okay, coming down and then maybe having like a short-term rally and then coming down. Like this is just chopping really, really hard, making it kind of difficult to know what to do with this coin. There's probably sell pressure because this launched in the bear market and because this has had so much chop. Because this has had so much chop during these periods, there's probably a lot of bag holders. So a lot of people that lost money on this crash here, and so this crash, so that they're looking to exit. So anytime the price goes up a little bit, they're like, oh, here's my exit opportunity. And so then you get these like really ugly deep wicks. Then at the same time, there's people that do want to buy it, which is driving its price up. Okay. But in the immediate short term, it has a lot of correcting to do. All that being said, has a lot of correcting to do in the immediate short term. We have to have price come down under to the zero line. Once we're under the baseline, then maybe we can start looking into picking up more of this coin. Also, yeah, this is showing a bearish trend right now with strong momentum, which is scary. RSI is looking okay. If you're looking to pick this coin up, I think maybe a good range could be, and again, none of this is financial advice. Hard to tell. If we have to correct more, I could see this touching $1.70. I think that's probably a decent range to pick some up. And if it drops under that, anything under $1.50 is like a steal. I would grab that right away. Yeah. Okay. Let's take a look at this next coin. What was the next coin? I think it was Near. We have got Near and Jupiter. I know Near is right here. Yeah, this is that AI coin. Yeah. Near, let me turn on some of this stuff. Near is looking really good. It's had some short-term difficulty kind of getting up, but this has kind of led to it not getting as, and guys, I see your comments. I'm gonna get to it in just 1 second. This has kind of led to it, this difficulty getting up has led to it from becoming way too overvalued. So I think Near is actually approaching a good buy zone. I gotta be honest. It did jump over, had this really strong run in very early December. Had this strong run. It got to $8.25. Now it's at under $6, actually. I do really think that roughly here is a good buy zone. If we take a look at the MACD, it's basically done correct. It has a little bit more to do. But again, a lot of these indicators are like up here versus now the lines are very close to baseline here. So yeah, I think this does have a little bit more correcting to do. Yeah, even RSI is under the 50 mark. But I think, I think this is a pretty good looking coin to enter in on soon. If you want some more specific levels, honestly, anything under 550 looks great. Let's get some specific stuff going. Anything under 550 looks great. If we lose 550, which it doesn't look like we really will. Next, like, strong point is like 450. So there's a lot of resistance from like 550 to like 530. And that is, I don't even know if it'll lose that. It totally might, because I don't know how necessarily deep this correction will be. Hopefully it won't hit Near as hard. But if we do lose 530 and we end up tumbling down to $5 or less, then anything between like $5 and $4.50 is like it's a steal. That's like an instant pickup for me. Yeah, maybe I'll grab some. Okay, what's next? We have Jupiter. That's right. Ugh, ugly coin. Although it's doing a little bit better than it was like a few months ago. Yes, the coin that doesn't ever pump. Everyone's favorite coin that everyone on social media told you to buy, even though it was garbage, and then they all sold on you. Okay. I'll just stick to TA. I could do some fundamentals. Okay. Tell you what, I'll show you something. I'll show you something right now. Check this out. This is our Discord, by the way. /info Jupiter. Okay. Just if you take a look at its tokenomics, right here, it gets a rating of poor, score 14 out of 100. Jupiter has poor tokenomics. This indicates Jupiter has to fight a lot of selling pressure, and this is considered a red flag. And oh, look at that. It has like never pumped. It launched, pumped like all these influencers were like, oh, buy this new amazing DEX on Solana. And then you did, and then they dumped on you, and now you're hoping, you're like, oh, I can't wait until it pumps again. I have a whole video talking about why I hate Jupiter, actually, and I still believe everything I said from that. Jupiter looks terrible. Oh man, is Bitcoin... Okay, no, I thought Bitcoin lost 100K for a second. If you're going to buy Jupiter, might as well do it now. It can't go much lower. Okay, but yeah, I mean, it's literally at the bottom fib level. I can't even... I don't know how to look at this chart. MACD is like, oh, this is terrible. Strong downward momentum. Look at this. The good news is you're going to have a buy opportunity and make a little bit of your money back quite soon. Probably only a few days, honestly. There will be this whole correction. Jupiter will probably get hit a little bit, not too hard. Yeah, it's hard to hit Jupiter any harder. And then you can buy a little bit and it'll probably pump. So, I'm sorry. I hate Jupiter. But I don't know. Everything's already horribly bearish here. I don't know how much worse it can get. Right? What am I looking? Yeah, I'm at Jupiter. Yeah. Okay. We've got for Bitcoin to drop to 5K. Villano said, "I'm waiting for Bitcoin to drop to 5K so I can pick up a few soon. Soon, you'll have your chance." Grayscale launched Lido as an investment fund. Did it really? It is very linked to ETH. Yeah, I know. If the SEC changes the ETF staking rules, I think we could see a good run. Yeah, I mean, if Ethereum does well, all Ethereum beta plays do well. If there's a fund for Lido, then of course Lido will do well. But we have to see like more concrete stuff. By the way, I'm looking down because this is where my comments are. If you look at ETH over BTC and I think that was Lido over BTC, they are similar. So I think if ETH outperforms ETC, Ethereum Classic, I think you meant ETH, Ethereum, hopefully Lido will do even better. Yeah, possible. It's totally possible. Yeah. I think generally like Ethereum beta plays will do better than Ethereum. So if you expect Ethereum, if you're like an Ethereum bull, you think Ethereum will do great, then yeah, I mean, it makes sense to pick up some Lido and hope it outperforms. Can you do render? We've got render and fetch or ASI. No, let's do render. And then maybe, if you guys have any more coins, go ahead and drop them, because we've got a couple people now tuning in. Guys, if you're just tuning in, make sure to subscribe and like the video. Okay. We'll do render and fetch and maybe stop after that so I can go sell my crypto. No, so I can go upload this. I need to chop it down a little bit. And okay, I'm just kind of stalling a little bit to see if anyone else has any other coins they want to go over. Let's take a look at render and fetch. Okay. Let me take a look. Yeah, it had this great run. Render did amazing in early March and February. Really, really good to see. And render is again looking incredibly strong. So yay, love to see that. Let's see how much render jumped. Render jumped 185%. Did it really? That's nuts. Yeah, render is looking immensely strong. And it looked like its correction already began a couple weeks ago, actually. So yeah, altcoins have been correcting for quite a while already. They've been ahead of the curve. Dropped under 50 on RSI. MACD is... It didn't even get that overextended. It did a little bit. But it is now... coming down to correct, and it's correcting very, very quickly. Very strong downward momentum, I gotta say. A lot of strong downward momentum, and it has more to continue. Right now, it's at 50-day EMA. If you are looking to pick up render, let's see. I think... Oh, it just touched the... What is this? I wish this were labeled. Which fib level this is. What is this? Probably like 0.683 or something, the fib level, but this is not labeled. Might have to get a new indicator. Yeah, I could see it losing this. I think it has to probably drop a little bit more. I think it's already under $8. I think something realistic is like $6.90. There seems to be a lot of support here. This is like a support level, and it's got a support level on the fib retracement indicator. So I think this has a little bit more to go, but not a lot. Let's see how much that is. Render has maybe from current price, not from where it wicked. It has maybe another 13% to drop. Of course, I could be totally wrong. Everything could like just crash and explode because Fed got a little bit bearish for 2025 today. But I'm trying to be realistic, and I think anywhere around $6.87 would be a really good purchase. Let's take a look at ASI. I know they got absolutely demolished after they tried integrating with Powell AI. They did their whole ASI merger, which was like kind of sus, kind of a little bit weird. And then they tried to also merge with Powell, and then everyone's like, you suck, ASI. And then they're like, oh, okay, we undo. They hit the undo button, and they're like, oh, Powell, get out of here. Please save my price. So maybe it worked. Let's take a look. By the way, if you're just now tuning in, make sure to subscribe. Make sure to like the video. If you're watching this on YouTube, sorry I'm saying it so often. I'm recording this live, and I've got new people tuning in, so I gotta spam that emote. Okay, let's take a look at Fetch. So the immediate thing that I note is that it had tremendous strength in February to March, early 2024, tremendous strength, and its movements since then have definitely been weaker. It like lost strength or something in the middle of the year. Maybe because like a lot of similar projects launched, like Virtuals, and I know there's a few others. I can't remember off the top of my head. So there's like a bit more competition. So maybe that's what's stealing this momentum. But then again, those also aren't listed on Coinbase, and Fetch is, so who knows. But just looking at it from a purely technical analysis standpoint, this is already hurting a little bit. It's already down like a lot from its top wick. Let me take a look. Yeah, it's already down like 30%. So, and if we take a look at its MACD, this is also like obviously it still has more to correct. Everything is going to correct. Everything is going to go down. But I think Fetch will go down less in relation to some of these other overbought coins because these MACD lines are almost at the zero line again, and it's already like corrected quite a lot. So this is another one of those coins. It looks like there's a pattern with these AI coins actually, and it looks like the pattern is that they're all kind of correcting a little bit early. They've all kind of been correcting here. So, okay. This is, where can it go? I can totally see it dropping to $1.30, $1.35 roughly, $1.37. Totally realistic. If we lose $1.37, I really don't expect to lose $1.30. If we lose $1.30, then I guess you're going to $1.10. From current price, the next support line is about a 6% drop. That's to $1.37. After that, it's an 11% drop to $1.30. And if you also lose that, it's a 25% drop to $1.10 from here. Guys, if you're just tuning in now, feel free to drop your coin in the chat. We're just taking a look at some coins after this FOMC meeting. Make sure to join our Discord. Make sure to subscribe. You don't get personal info like this from anyone else. Only Crypto Nerd. Subscribe to Crypto Nerd. And we have Brett as the last coin in chat. So Brett, I do have here. That is the biggest meme coin on Base. Why can't I find it? Here it is. Okay. Brett is looking incredibly strong. I think you can just eyeball this chart and see a very, very clear, hard to miss, even if you don't know anything. Higher high, higher low, higher high, and so far a higher low. So It's a very new coin. It launched only a few months ago. Yeah, 6 months ago. There's not a ton to look at, but from what we can see already, this is definitely looking very, very strong. You know, I know about this coin, so I'm going to tell you some info that's not purely technical analysis, but for just a moment, let's go and look at it. It has corrected a lot. It's actually dropped a lot. It's the MACD line is actually under 0, so that's good. I mean, that might mean that it's kind of looking for a bounce soon. I think something like right now it's at 14.5 cents. I think it's got a decently strong resistance, or rather support here at like 13 cents. So yeah, and paired with the MACD, it doesn't look like it has a whole lot more to drop. RSI is showing not a whole lot more to drop. If you want more specific levels, let's take a look at this stuff. I could see something like, okay, can you please load in? It takes a long time to load because it's like forget the term. It's not lightweight. It's like a heavy indicator. Okay, what if I move this? Please load. Are you really gonna make me paint it myself? You gotta make me paint it myself. What is this? Okay. Fine, I'll do it. Fine, I'll do it myself. Yeah, and this is actually like the exact same thing that we were talking about. There's this like support here at 0.618 level is 13.7, roughly 13 cents. Next support is going to be at 11 cents. So I guess if we lose the 13-cent level, so that would be like an 8% drop, which is actually more than I thought. So maybe Brett has like 8% more to go. If we lose that, then we're dropping 25% to probably 11 cents. And that's where I'd be looking to pick some up more if we can get that. Ah, curse you, AutoFib. You made me have to do it myself. So yeah, I think it doesn't have a ton more dropping to do in relation to other altcoins. I think this one's looking decently strong. There is something I want to caution you against, though. I know Brett is like the biggest meme coin on Base right now, and it was super, super popular like a month ago. But, I mean, it's competing against stuff like Pepe and Mog and Ski Mask Dog. Do I not have that here? What's wrong with me? And the reason that I think something like Mog is a better bet than Brett now is because Coinbase listed Mog. All of your friends can go buy Mog through Coinbase. They don't have to use, Coinbase Wallet or MetaMask or whatever you're using. I think in the long run, Mog is just going to very clearly outperform Brett. So if you're a Brett holder, this is what I did personally. I scaled out of Brett a little bit and I bought more Mog. So yeah. Also, Mog is a cat. Ski Mask Dog is a dog. And what is Brett? Who knows? Can you hear me still? Why is my mic sounding weird? Hello, hello? Can you hear me? What is going on with my technology today? I hate technology. Unless it's decentralized, then I don't. Okay. Okay, I think that's better. Okay, are there any other coins that anybody wants to suggest that we could take a quick look at? And guys, highly, highly suggest you join the Discord and follow me on Twitter. It's just so much easier for me to communicate on there. And if not, I'll just go ahead and end the stream now. And I'm going to chop this down into a YouTube video and upload this for the people that aren't going to be watching this live. Any other coins? Going once, going twice. Subscribe to Crypto Nerd. Yay. Guys, thank you so much for watching. Make sure to subscribe. Make sure to like the video. Make sure to join the Discord. Make sure to follow me on Twitter. And let me make you aware of an amazing... you guys know about this already. The AI assistant in the Discord. All right. Thanks for watching. Okay, now let me awkwardly end the stream because I don't have it set to a keybind. Oh man. Bye.